Good morning. My name is Richard Ponte, and I'm the Director of Events and Programs for the Maine State Chamber of Commerce. On behalf of the entire team here, it is my pleasure to welcome you to the Iranian conflict, energy markets, and Maine's energy strategy ahead, the latest in our webinar series. Thank you for joining. Before we get going, there are just a few things we'd like to share with you about today's session. All participants are in listen-only mode. Please submit questions using the Q&A function. Time permitting, we will answer them by the end of the session. We will also use the Q&A feature to share useful links and other materials. We have enabled closed captioning in English, and you can access this feature by toggling it on the taskbar at the bottom of your screen. The meeting is being recorded, and we will make the recording available to you on our website in the next few days. And finally, if you lose your connection, please use the same Zoom link to reconnect. We would now like to begin by thanking our sponsors. Our premier sponsor is Common Energy. Our supporting sponsor is Hydro-Quebec. Our 2026 webinar series sponsors are AARP, Central Maine Power Company, eBank, Next Era Energy Resources, and Northeast Delta Dental. And now I would like to introduce Elise Ferguson to provide a few remarks on behalf of today's premier sponsor, Common Energy. Elise serves as VP of Client Advisory. Good morning, Elise.
Good morning, Richard. Thank you. And welcome, everyone. My name is Elise Ferguson with Common Energy, and I'm happy to be with you all on today's session. We're meeting at a critical point in energy as the conflict in Iran continues to destabilize global markets. The cost of energy and the cost of other living drivers are continuing to rise here in Maine. And Mainers are in need of immediate relief and long-term policy solutions. I'm looking forward to hearing from our distinguished panel today on the global energy market outlook. And before we get started, I wanted to briefly share about a tangible solution to rising energy costs that is available to Mainers today. So the state of Maine has a net energy billing program, also called Community Solar, that is a state-led energy affordability program that provides discounts on electricity bills to local businesses and homes. It's designed for accessibility, so there's nothing that you need to install on your site or at your home. There's no change to your supply or your utility provider. It's purely a state-backed discount on your existing utility bill. Common is a certified provider for the program, and we have available capacity to help you reduce your electricity costs by thousands of dollars. So, we're pleased to support many of the country's leading organizations with these programs, including Microsoft, Starbucks, Nike, and those organizations use these programs to stabilize their electricity costs. And that's available to you and your business as well. I'll drop my contact information in the chat if anyone is interested in learning more about the programs or how they can participate. But with that, I want to hand it back over to Richard and our panelists for the discussion today. Thank you again for attending.
Thank you, Elise, and many thanks to all of our sponsors this morning. It is now my pleasure to introduce the President and CEO of the Maine State Chamber of Commerce, Patrick Woodcock. Patrick will be moderating the conversation today. Good morning, Patrick.
Well, good morning, and thank you, Richard, and thank you, Elise, Common Energy, and the rest of the sponsors for making this webinar possible. We're in really unprecedented territory with our energy markets showing incredible volatility just in the last 24 hours. And really, we want to make the connection of why this conflict has created such volatility in the markets, the implications in the Middle East, and how that is connected to your energy bills here in Maine. I'm so delighted to have just a wealth of knowledge to discuss the context and also how Maine should be responding to this volatility. I wanted to start with Ambassador Sekuta, who brings a wealth of an entire career in energy and in the Middle East. Ambassador Sekuta previously served as the ambassador to Azerbaijan, and had a long tenure in the energy resources uh, section of the State Department. He has a connection to Maine, and we're so appreciative for him to set the context and what he is watching as a ceasefire is not only 24 hours old. Ambassador Sekuta, will you please start with a little context setting with uh, why this is causing such dramatic implications in energy markets globally and here in the US?
Thank you very much, Patrick, and thank you very much for that very generous introduction. And sorry. And first of all, I'm very glad to be able to join you in looking at this situation. Um, Again, as you said, we are in the initial hours of this ceasefire, and I have to say personally, I very much hope it will hold. The U.S. military has achieved a great deal, but as history repeatedly shows, it's going to be up to others, i.e., the civilian authorities, to build on those achievements and to lead things forward. So, sort of putting things against that context. 2 points, or a couple points really, I'd like to make straight off. One is that the war underlined once again that even though the U.S. is the world's leading oil and gas producer, we are still part of a global system. In that global system, global demand, global supply sets the global prices. And so even though we've moved from being a natural gas importer, from being a crude oil importer, and are now an exporter, our prices here at home are affected by that global market. And what's happened in the Persian Gulf, what's happened in that part of the world has a direct impact on us and a number of different ways goes forward. The second basic point I want to try to get out right at the start is that while oil and natural gas prices, by the way, when I say gas, please assume I'm saying natural gas, not gasoline. While oil and natural gas prices have risen quickly as a result of the actions in the Gulf, expectations are that any price declines are going to be much, much slower. Energy prices, and that's the prices of refined products, is like jet fuel, heating fuel, asphalt, gasoline, are likely going to be elevated for some time due to the expected continued shortfalls in supplies coming out of the Gulf, as well as other factors that will make up what we call a risk premium. So let me expand a little bit on a couple of these points. If I could ask, put up that first slide on the choke points. Yeah, this kind of gets at the basic problem. If you look at this chart, you see a number of straits, canals, where oil supplies can be interdicted or halted in one way or the other. Key, of course, is the Strait of Hormuz. And you can see from that the flows going east to East Asia, China, Japan, Korea. Korea and Japan are very energy poor and desperately need this stuff, as well as going around to Europe. In terms of the basics here, the world oil demand is about 100 million barrels a day. The Energy Information Agency, which is part of the U.S. Department of Commerce, reports that right now we are producing about 13.6 million barrels a day of oil. All right, so you look at that map right there of Hormuz, that's less than is coming out of that part of the world to begin with. And we are producing really at full capacity. I can go into that later, why that is if you want. So that roughly 21, that's fifth of the world's oil, is coming out of Saudi Arabia. First of all, Iraq, which is the second largest OPEC producer, Qatar, the UAE, and Iran. Even though we've had sanctions on Iran, Iran has been exporting oil, but all that's been shut off. The other point here that is important to think about in terms of the strait is that it's not just the crude oil and the natural gas. Qatar, by the way, produces about right now about 20%, or what should be about 20% of the world's liquefied natural gas comes out of Qatar and also goes through the straits. That's blocked as well. So whatever I'm saying about oil will also apply to natural gas. But the point here too is other products that come out of that production, sulfur, urea, which goes into making fertilizer, other things, that's also blocked off. So that gives you a sense of what we're talking about here in terms of magnitude and the fact that there are not necessarily a whole lot of alternatives. And if I get that next slide, you'll see about this problem of lack of alternatives. This is also from the Department of Energy. And I like it. Actually, it's a 2022 figure, but the magnitudes are roughly the same. You sort of see what happens here. If you lose Saudi Arabia, you lose Iraq, you lose the UAE, you lose Kuwait, even lose Iran, how much of that oil is taken off the market? And there's not really alternatives. There are three big oil producers in the world. The US is number one, Saudi Arabia, and Russia. There are three big natural gas producers in the world: US, Russia, and Qatar. And so what we're seeing here is when you take this oil off the market, there's not really somebody else that can produce it. This doesn't show two key producers that are coming on now, Brazil and Guyana, but they're not able to make this up. The other thing here to think about that's not necessarily apparent in this slide is that in the past, one of the things which we always looked at in the US government was excess production capability. OPEC, remember, likes to sort of keep prices at a certain level, and they would periodically, they frankly still do, say, we only want oil to be produced up to a certain amount to keep prices at a certain level. That meant that some countries, particularly Saudi Arabia, UAE, and Kuwait, had the capacity to go further. Now, and we sort of always said, oh, if there's a problem in the world, we've got the Strategic Petroleum Reserve, we can go to the Saudis and get them to produce more. We lost that insurance policy because that Saudi oil really can't get out. Saudis do have a pipeline that goes across the peninsula, but it's about maximum 5 million barrels a day. Right now, it's running about 3.5. So again, what we always sort of counted on in terms of an emergency with Saudi helping us, they can't do that either. That was really one of the things which we really, really focused on. So again, this sort of worsens the situation further. Finally, let me show this third slide up here. This gets at one of the other factors and probably a more serious problem, frankly. And that is the damage that's been done to countries' energy systems in the Middle East. Now, it's one thing to block the strait and stop the oil from flowing. These attacks on the infrastructure, on refineries, on various processing facilities, on the Qatari liquefaction plant that takes that natural gas, turns it into liquid, then be able to get it shipped out. That's going to take longer to fix. And so we've seen Iranian drone attacks on Saudi Arabia's largest oil refinery, that's in Ras Al-Khaimah, and that is now shut down. Ruwais in the UAE is the UAE's largest refinery. That's shut down. The Iranians also did attacks on Abu Dhabi's gas fields, and also on, if you see the small thing at the end on Fujairah, that's a point where the UAE has a small pipeline that can get stuff out past the Gulf. The Iranian attacks shut that down. Finally, and importantly as well, is the Iranian attacks on Ras Laffan in Qatar, and that shut down the LNG, the liquefied natural gas exports. So all these things are driving up prices. And the problem here too is you can't just sort of say, okay, the Gulf's open, everybody out, trade goes back to normal. A couple factors here. One, and I'll start with this damage. When you damage the infrastructure, it's going to take a lot longer. It's going to be expensive. It's going to be difficult to build it back up. You can't just kind of, go down, hey, I need a liquefaction plant. By the way, a liquefaction plant runs in the neighborhood of $10 to $15 billion. So this is some major damage that's been done. Second thing is even the fields themselves. A lot of production was shut in because there was no place to put it. There were no tanks. Couldn't put in a tanker, so they simply had to shut the fields down. You have to restart them in a very careful way, and it tends to be slow because if you don't do it the right way, you damage the field and you damage future production. So this is another factor that's going to take place. A third thing here to consider is that even if the strait is open, there is going to be hesitancy on the part of the shippers, on the part of the crews, and the part of the insurance companies, the insurance that supply that insure the tankers, um, to go in, and how easy is this going to be? Um, there's also talk about the Iranians charging tolls. And one figure I saw this morning is that if they do go ahead with that, I think it's JP Morgan, I think it was, that did the study, they could be making somewhere in the neighborhood of $50 billion a year or more in terms of tolls. I got to check my numbers here a little bit later. That's all going to get passed on. That's all going to be passed on to consumers. So that brings me to the final points here. I've talked about the supply side. What about the demand side? Global demand is basically going to be about 100 million barrels a day, and it's not necessarily going to decrease. It might increase a little bit. The US, yes, we can produce all we need. Pretty much, there's some technical things regarding refiners we don't need to get into right now. So we'll still be importing some oil, but basically we're okay. But our prices are going to be up because of the global situation. Second thing is countries that are exceedingly dependent on this oil and on this natural gas are going to continue to be affected. Key among those, Japan, world's third largest economy, um, Korea, major economy, China. Um, they're paying much more for these products, and that's going to get translated again into everything they make and they sell. Second piece on this I'm concerned about our poorer countries, the Pakistans and the Nepals of this world, where I think it's 90% of Pakistan's natural gas comes from the Gulf. That's shut off. That means they cannot run uh, a lot of their power generation, a lot of their electrical systems. Extended extended blackouts, rather, Yanni, that translates to political problems in these countries. Nepal, for example, has had to shut off, they've not been able to get the butagas, the butane, the propane that they need to cook their food. Korea has established a rationing system for gasoline right now. So these effects are kind of filtering through. They're causing distortions. They're going to be putting upward pressure on prices, and that again is going to be translated around the rest of the world. So, hopefully the ceasefire holds. Hopefully things can move forward. But I think one of the point right now, I just want to kind of close with, is that there's a quote this morning that Maersk, which is obviously one of the world's biggest shipping companies, is saying, quote, "The ceasefire may create transit opportunities, but it does not yet provide full maritime certainty, and we need to understand all potential conditions." Roughly right now, a company that tracks shipping sees over 400 tankers and other ships still stranded in the Gulf. So this is going to be a problem for a while. Again, hopefully ceasefire holds, hopefully things move forward, but it is going to be a while, and the prices go up real fast, but they're slow going down. So let me just stop there.
Well,
Thanks.
Ambassador, you are demonstrating a career in the Middle East and on energy issues. So appreciative of that insight. I did want to turn to Maine, but before we do, I just have to ask you, what are you really watching in the hours as they unfold? Take us into the State Department. Are they, my understanding is there were some Pakistani flagged vessels that did transit during the conflict. Are they assessing which vessels would be the first ones to try to get an arrangement through? What countries? And lastly, I have a hard time just seeing Saudi Arabia, Kuwait paying tolls for their product. I mean, how realistic would they really accept that as an outcome?
Yeah, a couple things. Actually, I should say, first of all, the group which we had in the State Department that covered energy has been disbanded. It was eliminated last year. So I would say what we normally would have been doing, and hopefully people are doing in the U.S. government, what you'd be looking at, first of all, is I think, the state of the negotiations, they're hope that the Pakistanis are hoping to sort of keep going. And what the trend line there is. I think we should be, and what our embassy should be doing, is engaging with the governments overseas, particularly Tokyo, Beijing, Seoul, Delhi, Islamabad, and I can start going on and on. Don't forget the Europeans. Guess diesel price in Germany, for those of you depressed about prices here, for my class that I teach here, diesel prices at the beginning of this week were averaging $10 a gallon. So, think about that when you're trying to drive your tractor or something. Um, so looking at what those governments are doing, how they're handling this, this question of the tolls is really, really important. The I don't know that the Saudi who is going to pay the toll is probably going to simply be translated on to the tanker. And so that's going to be another shipping cost, which is going to get passed on to the consumer, whether industrial or private sector, it doesn't matter. We all know the person at the end is the one who ends up paying for everything. Um, that really is a very key problem because the strait is an international waterway. It's not a canal, so there shouldn't be a toll. That's sort of international law. Um, and so that'd be one of the things which I think we have to really, really beat back. And I would say, with building your point, Patrick, I would work with the Saudis, the Qataris, others in the region, as well as consumers, the Paks, the Indians, the Koreans, the Chinese, you name it, to say, no, this is an international waterway. No, Iran, you can't charge a toll on this thing. I would also argue, as an American diplomat, as someone who worked on sanctions, you don't want to be giving the mullahs more money. So,
It is going to be fascinating to unfold. To your point, I think we've seen markets react with Brent crude falling about 17%, but 40% higher than when the prior to the conflict. So this is going to stay with us, and to your point, lasting damage on this energy infrastructure. I did want to turn to Maine, and you mentioned the rationing in Asia, the diesel prices in Germany. Uh, every country has its own ramifications, and certainly in the United States, there's been a lot of focus on the headline gas prices, but there are a lot of unique vulnerabilities or ramifications in New England. And to set that context, really pleased to introduce Andy Price, who is the president and CEO of Competitive Energy Services, which is a Maine-based energy full-service consulting firm. Andy, I'll turn to you for your assessment of the ramifications here in Maine and New England.
Thanks, Patrick. Good morning, everybody. Thanks for having me. I'm going to try to share my screen here. Risk of messing this up. Can folks see this?
Yes.
You're good.
Great. Well, thank you again. I did want to just zoom in to the U.S. The ambassador set a great context there about how prices have really jumped in Europe and around the rest of the world, particularly in Asia. And zooming into the US, I'm going to show a series of 4 charts here, all in identical formats. So you only have to learn this format once, showing you forward pricing between April 2026 out through March 2028, and how that forward price curve has changed if we look at it on 3 distinct dates. The first date being November 1st, 2025, so heading into the winter. The second date being February 1st, right after the severe winter weather we had, Winter Storm Fern. And the final date, April 1st, about a month into the conflict in Iran. This first chart, I'm showing you natural gas prices at the Henry Hub. This is effectively a proxy for the U.S. Benchmark price for natural gas. And interestingly, what you can see is that between November through February and now in April, prices have actually dropped. And this is in reaction, of course, to really strong production here in the US and a limitation on how much we can export our natural gas. Prior to the war starting, we were already exporting in the form of liquefied natural gas at our maximum capacity. So we really haven't had the ability to increase those exports in response to higher prices in Europe and Asia. So that's the national picture. Jumping ahead here or zooming in to the Maine situation, very different picture here in Maine. Same 3 dates, November, February, and April, but a very different outcome. May through October.
Sorry to interrupt. I'm still seeing Henry Hub. I don't know if just wanted to.
Thanks, Patrick.
Okay, thank you.
How's that? So yeah, very different picture in Maine through the summer and fall. Actually, similar situation with slightly lower prices, but very dramatic difference in the winter when we see there was a reaction and jump after Winter Storm Fern, but a much more significant jump here after the war in Iran, because here in New England, as folks may know, we have some natural gas pipeline constraints that limit our ability to import sufficient natural gas supplies during those peak winter heating months, and we rely on imported liquefied natural gas. We're effectively competing with European and Asian prices to attract those cargoes, and our prices have jumped here pretty significantly in the winter as a result. Now taking a look at electricity, there's no sort of US benchmark with electricity like there is with natural gas. Hopefully you can see this next slide now. I've chosen Ohio here as a mid-US proxy. Again, November, February, and April. Apologies for changing the colors on you, but April is in green. And you can see a similar relationship as to natural gas. Pricing has actually dropped in response to following the natural gas drop. Moving ahead now to New England and the impacts that we're feeling here in Maine. We've seen that winter spike, just like we saw with natural gas. This is what consumers here in Maine will be facing if they're looking to hedge forward their electricity pricing through this April through March term. Pretty significant increases in the winter, $40 per megawatt hour. So this is going to impact folks that have a winter heavy profile, a heating profile, more than consumers that use more levelized throughout the year. But it's a pretty significant impact. And again, it's because in those peak winter heating months, we rely on imported liquefied natural gas, but also oil to generate our electricity. And just as my final slide here to illustrate that point, this shows you the supply mix on the left-hand chart. This is the supply mix that we had the last week of January this year during that really cold snap we had, Winter Storm Fern. And you can see that oil was actually the most dominant fuel used here during that period for electricity generation. Some of that natural gas was liquefied natural gas. That was at a much higher price. That's what really increased our pricing during those winter months. A typical situation you can see on the right-hand chart. This is for all of calendar 2025. Natural gas is the dominant fuel. During those non-winter months, we typically pay more of a national price, and that's very low and attractive. So Unfortunately, we're dealing with a pretty unique situation here in New England and Maine compared to the rest of the U.S. in terms of the impacts that we're feeling from the war.
Andy, I'll just jump in. We've been receiving phone calls from businesses trying to navigate this landscape. While every business is different, what type of advice are you providing right now with so much volatility on trying to mitigate the impacts, with electricity supply contracts coming due? What's the advice for the business community today?
Yeah, unfortunately, fortunately or unfortunately, depending on the situation, I mean, the best thing that businesses can do, I think, is to have a strategy and to sort of constantly be in the market, monitoring the market. It's hard to sort of react to changes as they happen. Hopefully, I'm not frozen here.
No.
Oh, Patrick is frozen. So yeah, the key thing is to, I guess, be in the market and be monitoring the market continuously. There's no sort of right time to hedge. If there were, everybody would hedge at that moment in time. So you kind of need to, uh, uh, look throughout the year and look sufficiently forward. Not be reactive to market events because of the extreme volatility that we have particularly in New England, with our unique sort of situation with the natural gas pipeline shortages.
Now, I think for anybody who's followed our energy markets, we think about our consumption during the winter, and the conflict really came towards the final chapter of Maine winter. What are you looking at in the next few months of whether this will have a significant impact or medium, modest impact into the next winter? What kind of forward markets are you watching to see if this is going to be a major impact or more moderate?
Yeah, good question. Really, it's, for us here in New England and in Maine, it's that world LNG price and the world oil price. And as the ambassador laid out very clearly, those are world markets, and we're unfortunately subject to them in the winter for both our natural gas costs and our electricity costs. So if those stay elevated heading into next winter, prices will continue to be high. If we see those moderate, if things recover more quickly than expected, we'll see that current price curve I showed come down a little bit and provide some relief.
Well, thank you, Andy. Great overview, although it is concerning to see this kind of spread and how Maine businesses are affected versus businesses across the country. We really are in a unique situation in New England, and it raises a fundamental question of what should Maine and New England do as a result. And with that, to start kind of our policy discussion, so pleased to have the chair of the Public Utilities Commission join us this morning. Chair Bartlett has been chair for going over 2 terms, and is also the state's representative on the New England States Committee on Electricity, board member of the of NARUC, and has been uh, engaged on the legislative and policy side for decades. Chair Bartlett, I'll turn to you for some initial comments and reflections of these presentations.
Thank you. It'd be nice if we had a clear silver bullet, but there aren't any. I mean, I think Andy laid out really nicely the problem here in New England. The gas constraint really plays a big role in the winter. And it's not just that LNG prices are high, but as we saw this winter, when it gets really cold and demand peaks, then we start burning a whole lot of oil. So we're really subject to the pressure on both sides, both in terms of the gas and the oil issues. And that drives so much of the cost over the course of the year, just in those few winter months when prices are so very expensive. So I think what this conflict really has shown is how vulnerable, once again, New England is to international supply shocks. We saw it back when Russia invaded Ukraine. We saw a huge increase in our electricity prices. They came down a little, but they've not returned to where they were sort of pre-invasion. So we're still having significant impacts as a result. And then you have this added shock on top of it that is impacting both the gas and oil price. And that just puts us in a terrible position for winter. So I think the long term, I think that what we need to be thinking about is how to better diversify our portfolio, how to minimize the number of days and hours of a year that we are highly dependent on those most expensive fuels. And particularly as we're thinking about additional electrification. ISO New England is projecting load to grow over the next several years. And by the mid-2030s, we could start having some resource adequacy challenges, meaning we're going to have new generation. If the markets left to their own devices can produce some additional generation, it's most likely to be converting existing natural gas facilities to dual fuel so that they can switch to oil when gas gets really tight and there's short supplies in the winter. That helps from a reliability standpoint, but it doesn't help in terms of our vulnerability to international fossil fuel prices. So I think there's a big role for the states in New England to be thinking about the path that we're on, and then what are alternative state policies that could be implemented to try to encourage additional diversification and better load management to try to minimize the potential harms and the vulnerability that we have.
Chair, you've been involved in regional discussions for years now. You've been one of the leaders looking to facilitate additional transmission development. I don't envy for your role in reviewing the New England Clean Energy Connect line. Do you think there is interest in additional infrastructure in New England? Additional generation, take us to your discussions with the other New England states right now.
Yeah, I mean, I think there's a lot of interest. We're currently working on our procurement of the transmission line and generation up in northern Maine, and we've seen 5 of the 6 New England states, 4 of the states joining Maine to try to procure additional onshore wind resources. So I think there's a real recognition that we need to get more resources on faster. And I also think there's a real desire to look at interregional transmission as potential solution as well. I mean, this isn't going to be solved, I think, by any one thing, but we've got to look at it. We have to look at, is there additional transmission that could be built to help to diversify and get past our gas constraints? Should we be looking at some modest expansion of pipeline capacity? I think that is potentially a good short, medium, or really medium term potential solution to bring downward pressure on prices. But at some point, the U.S. is going to increase its export capacity for LNG, and we should expect gas prices over time to rise. So it's not necessarily a long-term, I think, solution to the risk of susceptibility to international prices, but it's something that could be done in the medium term. I think we have to continue to look at any kind of additional renewable resources or baseload generation that is not fossil fuel driven that we can either bring on or better support in the region. We should be looking at storage. Are there more solar storage kind of options? Really, we need to expand the playing field to get as broad as we can to really achieve much better diversification for the region.
Last question, affordability was already strained prior to this event. Any advice for policymakers in the legislature, really, and the next governor, really what should the focus be to try to start trying to address this affordability issue that businesses and households are facing?
It's a challenge because it's really hard to beat the market in terms of like a standard offer or procurement. We are certainly making some changes at the commission. We're constantly evaluating how we procure standard offer, trying to spread out our bidding days, potentially reducing this kind of the blocks that we're bidding at each time. So we're looking at things we could do to better, I think, hedge the risk over time, but it's not going to solve it, right? That's not going to bring prices down in and of itself. One of the things that I continue to think is really important is giving customers more tools to manage their energy usage. That can be, putting solar panels on your roof, and maybe installing a battery. That can include looking at time of use rates. A lot of customers could benefit today from a time of use rate that's available to them without changing anything, and that could help to lower their costs and help them to manage their costs through the winter months. They can certainly look at community solar or other potential options, but they're limited. I mean, the things you can do in the shortest term are things like reducing your usage, making sure you're on a good rate, and then I think for businesses, shop around, see if there is a better product that a supply that you can get if you are a smaller business on the standard offer.
Thank you, Chair Bartlett. Do appreciate those insights. I did want to turn to some open-ended policy discussions with some additional panelists. As a quick introduction, Tony Buxton has been a long time leading energy voice in Maine and New England. He's senior counsel at PretiFlaherty, and has been working in energy issues in the state house and regionally for decades now. Charlie Summers has had a role in public service and is now president and CEO of the Maine Energy Marketers Association. And Kyle Collins is the director of business development at Hydro-Quebec. Gentlemen, I'll let any of you start. First impressions from this discussion today. What really should Maine be doing as a result of this evolving new dynamic with energy pricing today?
Well, Patrick, I'm shy, so I'll start. Thank you, first of all, for doing this, Patrick. Your expertise and the involvement of the Chamber is extremely important to building what Maine needs, and I'm going to talk about that. The context here for my clients, who are generally industrial clients in Maine and elsewhere, shows that Maine remains the most petroleum-intensive economy as a state, except for Alaska and Hawaii, among the 50 states, despite great efforts by many. That makes us vulnerable to things like what's happening in Iran and Ukraine. And unfortunately, we still have an energy system in Maine for responding and protecting our citizens that was created first when Woodrow Wilson was president of the United States and proposed the League of Nations. The world has changed, and we need to seriously consider and move toward a much more powerful, sovereign approach to energy, like our adjacent communities. New Brunswick, Quebec, Massachusetts, each have the ability to move more quickly and more decisively with leadership by the governor and others in the structure. We don't have that. And as a consequence, we have become a victim of whatever's happening in the world, whether it's by Putin or Trump or whoever. We receive the results and have to respond. We don't have an aggressive policy on how to avoid that. And we need to move that way very quickly, because as it stands right now, we are effectively a doormat to other people who take action, particularly Quebec, Massachusetts, and New Brunswick.
Yeah, there's a lot I could follow up with that, but
Yeah.
Kyle, you want to jump in?
Yeah, no, some important points got raised. So yeah, I'd like to piggyback on Chair Bartlett's remarks regarding what Maine can and should be doing to kind of insulate themselves from the price volatility from global instability. But first, one of the major things is I think New England took action a number of years ago to commission a new transmission line with Quebec called the New England Clean Energy Connect project that began operation earlier this year, that has a capability to deliver 1,200 megawatts of clean supply from Quebec to New England every hour, and is committed to New England over a 20-year contract with the state of Massachusetts, meaning that 9.5 million megawatt hours of additional generation will be supplied to New England for the next 20 years, representing about 8% of New England's total annual electricity supply going forward. And this is a generation that it is delivered at a fixed price that helps provide fuels diversity benefits and isn't connected to oil and LNG and natural gas prices that others on the panel have already referenced, is kind of the framework for why pricing is so volatile in the New England region. But Maine and New England are also doing a number of other things to unlock additional supply for the region to help improve the situation. So Chair Bartlett referenced the procurement to unlock northern Maine wind that's currently underway. You have in ISO New England a new LTTP longer term transmission planning process to develop additional transmission to unlock renewables and clean energy from Maine and northern New England to help be more broadly deliverable to the southern states. We have capacity market design underway to shift the ISO New England market from a forwards annual market to a prompt seasonal market to help send the right price signals to incent entry and exit of the right resources we need to permanently replace aging fossil fuel generation on the system. So all that to say, I think there's a lot more work to do, but some of the key investments have been made and they're underway to help move the needle on diversifying New England's electricity supply.
Well, I'll just say, as Andy really outlined, we have really been we've been aligned with the pricing of liquefied natural gas in Europe, and following the initiation of the Ukrainian-Russian conflict, a lot of European countries raced to build out transmission, build out natural gas infrastructure, and it does raise questions. I think the plans for the Northeast Clean Energy Connect were exactly ways to mitigate our exposure to petroleum and natural gas from international markets. I did want to turn to Charlie. Your membership, you are on the front lines of this, delivering these critical products to Maine businesses, Maine households. They sometimes deliver the bill, but they're not creating the bill for customers. What are you hearing from your members, and what are your recommendations for Maine, Charlie?
Well, first of all, Patrick, thank you. I appreciate being able to be a part of this and see people who I've worked with over the years, including yourself, since the early 90s. You look at the oil consumption, for example. We've talked about that here in the state of Maine. Fully 7 in 10 homes in the state of Maine either use home heating oil or they use propane. But if you look at the consumption, the average consumption back in 1990, Mainers were using about 1,200 to 1,400 gallons a year of home heating oil. Today, they're about 650 to 750 a year, 650 gallons to 750 gallons a year. That speaks, I think, largely to consumer choice. And I know Phil Bartlett talked about diversification, which we would argue is very, very important. But consumers have to have that choice. And consumers are, in fact, making the decision whether they stay on home heating oil, whether they move to propane, whether they move to wood pellets or any variety of heating sources. And I think that our recommendation for policymakers would not be to have a knee-jerk reaction. I can remember in the 1970s, I know Tony remembers this, when there was the big push to go to non-utility generators and NUGs, as they called them. Of course, that drove the price of electricity through the roof in the early 90s. And I think we need to avoid that. We have to look at other options, nuclear, for example. I haven't heard a lot of discussion about that, but that has to enter into the conversation if, in fact, I think we are going to continue to look to diversify our options and to limit our exposure on a global basis. But as the ambassador said, as others have said earlier, this energy is a global commodity and it will change. And whether it's a war in Iran, whether it's what is going on in Ukraine, there will be actions and reactions to what goes on in the global market. And we need to understand that. And I really would encourage policymakers to really take that long view and let the consumer decide. You're seeing, again, I'll say it again, in Maine, consumers have made their decision and are making their decisions. That's why my association fought so hard to ensure energy choice here, because as they say in the military, you do not want to have that single point of failure. And by that, whether it's electricity, whether it's fossil fuels, whether it's trying to go to solar, we have to have that diversification. And finally, I'll say what my 95-year-old father says all the time, and is that you don't get nothing for nothing. And there are costs associated with everything we do. And our efforts here in Maine, we certainly need to look forward. We need to diversify, but we need to not over-regulate and think on the policy side of the equation. We have to let the consumer continue to decide. And I hope that that's where the chamber is on that as well.
I did want to raise, just in the last month, the New England governors issued a statement indicating support for advanced nuclear. That's really a significant development in the last few years. And I wonder, to all the panelists, are there new technologies that you think that Maine should be seriously considering, making sure that we create competitive procurements to include, and prospects of nuclear power in New England?
Patrick, if I may sort of interrupt here, there certainly are other technologies, but we are victims of what I call the mañana syndrome. Don't take action now that is easy to take, that is clearly necessary, and hope for something else in the long term. We should seriously consider nuclear technology, and the legislature has tried to do that. But the reality is we should have pipeline capacity expansion happening right now. And the opposition to it is led primarily by Massachusetts and New York, and there are ways to deal with that. We should not be building transmission lines into Maine to benefit those states when they refuse to take the action necessary to get us off oil and maybe to increase natural gas. Similarly, it is a serious mistake, with all respect to the chairman, for Maine to be giving away to other states the right to take our onshore wind and solar out of northern Maine rather than our selling it to them. They do nothing for free for us, and there are many things they don't do that could be helpful. That's why we need a sovereign approach to this, the same way Massachusetts has, New Brunswick, and Quebec.
Chair, I saw you
Wins.
want to answer on the nuclear piece, but there also, raise the question, we do need a regional, we're all in this together, renewable development, natural gas. Is there a partnership available?
Yeah, I mean, so I think Maine certainly, as policy, has been supportive of gas expansion to the extent it's feasible. So I think we will continue to look at opportunities. We need somebody to bring something to the table, right? An actual project, real timelines, real costs, so that the region can evaluate it. And then I think that's where you get into the discussions with the other states. So that's absolutely important. I think on nuclear, I absolutely support an all of the above approach and looking at nuclear. That's going to be a longer term solution by any stretch. But I think what we would get to is that the current market structure is set up to procure fossil fuel generation because it's relatively low upfront capital costs. All the money's in the fuel cost. So that is great in terms of getting something built quickly, but it's not good in terms of dealing with our exposure to international fossil fuel prices and overall costs for consumers. So to do anything else, whether that is wind or nuclear or transmission, is going to require some kind of the state stepping up, whether that is a procurement process or otherwise. Someone's got to be on the hook, right? Someone's going to enter into those longer term contracts so that you can have financing capabilities. I think where I disagree with Tony is that I don't think the states need to compete here. The issue is getting more electrons into the system. To the extent you are signing a contract, you are providing a financing tool, and it does provide some hedge against prices in the future, but you is likely to lose is to win in terms of what the price point is that contract is for. Maine is a small state. We can't build a lot of transmission lines or go on the hook for a big nuclear plant, but we certainly can partner with other states to diversify that risk and to get more electrons to the system. Every non-carbon generated electron in the system is putting downward pressure on prices. It can help to reduce the number of hours that we are exposed to those very, very high prices in the winter that drive so much of the cost throughout the year.
And with all respect to the chairman, we need to ask with every decision we make at the governmental level, what's in it for Maine? And that question is not being asked and answered adequately in Maine.
The commission is certainly being asked all the time.
Well, I did want to touch on, another region's perspective too. Kyle, there's been some pressure on the load in Quebec. Really, what is happening in the Maritimes and in Quebec to address what's been a rapidly growing electric demand on the system? And there has been some discussion in New England about whether the hydro resources are really there. Can you respond to those critiques and what is Quebec doing to address it?
Yeah, sure. So for context, I think I want to lead off by saying Hydro-Quebec has a sufficient generation capacity to meet all of our firm commitments. That's both within Quebec and in the export markets, including the contract over the NECEC transmission project with New England and the kind of sister project in New York called the Champlain Hudson Power Express. That being said, we're on the tail end of three consecutive years of considerably lower than average hydroelectricity inflows. So a lot of these spot market sales that we've seen Hydro-Quebec sell to New England over the past 10 years, which have averaged about 10 terawatt hours every year, have been significantly reduced. But I think it's important to note, those sales were always done on a short-term voluntary spot market basis and weren't secured under long-term contract. In terms of what Hydro-Quebec is doing, we're facing the same demand growth projections as the rest of the Northeast, with our demand projected to roughly double by 2050. So we're in the midst of a 10-year action plan to add about 10 gigawatts of new clean capacity in the form of new hydropower refurbishments, land-based wind, solar, and a piece of that I think is going to be net imports. Part of the value of the Hydro-Quebec system is we have the capability to act like a giant battery to store energy over extended periods of time. And that could be really valuable when paired with the Northeastern region that has a lot of excess production. In terms of our activities with Atlantic Canada, we recently issued a RFI to look at accessing more offshore wind in Nova Scotia. And we have an MOU with the province of Newfoundland Labrador for looking at expanded hydropower facilities in that region. So I think there's a lot of supply opportunities for Hydro-Quebec. We're taking the steps necessary to make sure that we have sufficient generating capacity in the future. But when you pair that with the flexibility of our system and the fact that we're intertied with multiple markets, I think if done correctly, that could be a huge benefit to Maine and New England. I mean, Chair Bartlett talked about the need for long duration storage, and that's a product that we can easily provide today with existing infrastructure. What we really lack is the market signals to secure that for New England. So I think that's a very timely conversation to have.
We are at the hour, but I did want to ask Ambassador Sekuta, you're you're an energy consumer in Maine. You're hearing this conversation from a global perspective. Any comments from you as you listen to this conversation for advice for Maine policymakers?
Yeah, I am an energy consumer, and actually, my wife just showed me our bill from. So yeah, and we have a kid living up there, who commutes 45 minutes from Jefferson to Freeport. One way, well, twice a day. So I'm sympathetic. I know a lot of Mainers do that kind of commute. I think we're going to be hit, obviously, by these prices, and I think again. I will confess I'm an all of the above guy. we need every kind of technology we can use and sort of move this stuff forward. One thing I would sort of close with, we didn't really talk about this a little bit. I teach geopolitics of energy at an American university in DC, which is why I'm in Washington now and not up in Maine. But the real surprise to me, growing up and having been through the 3 Mile Island and Chernobyl and all the rest of the things that really turned people's opinion against nuclear, my students are all, and I mean all, very much in favor of nuclear power. They really see this as the way forward. They're interested in small modular nuclear reactors, the innovations that are coming forward right now. So I think maybe our political system, if I can, switch over to the domestic side of life, is coming into this a little bit. We may have some change in environment in our dialogue that may be helpful. Definitely, I can tell you from my work at the State Department, we need to integrate again among parts of the U.S. We are all dependent on each other. We're all in this together, and I fully recognize these problems that come with the bottlenecks in pipelines. And we are going to be stuck with this global system. We are part of it, and we're going to be part of this every time you fill up your boat, you fill up your tractor, you want to try to put fertilizer down on your field, and you want to sell a product. We're going to be hit by this, and so we're going to have to kind of work together on it.
Well, that's a great way to conclude this discussion this morning on the impacts of the Iranian conflict. Pragmatism, being open-minded to new technology, and also being really deliberate when we are making public policy, as we understand the impacts on consumers' bills that can be exacerbated by international events. I really do want to thank our sponsors today, our panelists. I really appreciate what has been a really illustration of Maine's vulnerability to a global conflict. Thank you to our premier sponsor, Common Energy, and we'll see you next month for our next webinar from the Maine State Chamber of Commerce. Thank you.